My name is Lovrenich. I am the founder and CEO of InsurEco Systems. We are a blockchain-enabled, decentralized, end-to-end software insurance platform. Where we're different is that we bring value and savings to every segment. There we go. We bring value and savings to every segment of the industry. So from the insured, the retail agent, and all the way to the carrier, the reinsurer, the legislators, we bring value to everyone without exiting any of the existing players. So there's a lot, if you're familiar with insurance right now, there's a lot of disintermediation going on where they're cutting out the carriers going direct to the insured, and our solution actually provides the rails that are needed for the insurance broker to stay a part of that solution. And we've been automating workflows since 2002 when we were just a technology company. In early 2017, we developed Policy Blockchain, which is both a private and public blockchain solution. We store sensitive data inside of the private chain. We store access and other data in the public, and then share that with regulators and other entities that need to be involved so they can see what's going on in that insurance transaction. And so that makes us an insurtech company. And insurtech, for those of you that don't know what insurtech is, don't feel that you're missing the boat. We just got back from the United States Treasury, had a federal action committee on insurance, and the primary presentation purpose was to illustrate where insurance is going. And the two primary factors that they spoke about was insurtech, so technology and insurance, and blockchain. And they're presenting that to the president. He's going to then take that to the House and give his presentation on where insurance is going. So insurtech and blockchain are rooted very, very, very much inside of the industry. Now, let's talk about how is the supply chain. We obviously, this is my only slide here, I promise, that's going to say this. But we know that it's established leaders that are in the industry. It's very much like insurance right now, where the big folks, the giants, are actually realizing that this technology is for them. It is going to help them. This is no longer pilot projects. We're getting into large-scale global solutions that are being implemented by mature software providers, developers, Dell. You're looking, IBM, Hyperledger. It's not just my cousin knows some blockchain and he trades Bitcoin, therefore he's going to make me a proof of concept. This is real. It's there. So I don't want to focus, for my side of it, we're not focused on the global shipping. Those are other presentations. But what we focus on is trucking. So our insurance that we write is primarily for the construction industry and the transportation industry. In the commercial transportation industry, trucking does rule. And about over 80% of the revenue generated from commercial transportation is in trucking. We're seeing, I've seen reports, I think it's the same 20 to 30% that floats around in blockchain conventions, but it's also floating around in these other conventions as well, talking about transportation, saying they're going to see a growth of that over the next 5 to 10 years. Why is trucking so big? Thank you, Amazon. That cardboard Santa that shows up at my house every day, he keeps bringing more and more boxes to me. He's delivering those goods that we used to want to go to a store and buy, and then we'd bring them home. Now we're saying we want those brought to our doors. So it's not like that's going to change. I don't think we need to really go into that too much. So who's bringing those? Who's bringing those packages to us? There's 1.2 million motor carriers in the country that's registered with the Federal Motor Carrier Safety Administration. And 97% of those have less than 20 trucks. 90% of those have less than 6 trucks. So that says that those people that are bringing those last mile packages, those cardboard Santas, let's say, as I call them, those are smaller companies. Those aren't the large suppliers. Now, this creates a prime example for gig disruption. We're seeing the gig players, Uber, they kind of put it on the map, right? They're coming out with a freight. We're seeing U-Ship is out. Buddy Truck is another last mile where you can rent a truck for 40 bucks. Now, this technology is allowing these smaller driver, the smaller carrier, to be able to operate his business independently. He becomes an owner-operator, essentially. And he leans on the network to provide his back office. And you'll see here, it's kind of cut off, but the blue on the top right is how much the actual driver makes. And then by average, this is the technology, the gig fee. So you can see that not only or you're making the same money whether you're providing the platform or actually doing the job. And that's an interesting piece of the puzzle. You can also look up at the insurance piece of it, and you're looking at 3%. Now, that 3%, in my opinion, and what I'm seeing, that is about mitigating the risk that's going on in that transaction. The only way you can mitigate the risk is if you have all the data. Insurance companies have more data probably than anybody but Google and Facebook. And we're seeing legislation come down on them about where they're going to store that data, how they're going to use that data. And at the Federal Action Committee, there was an example of a claim where a Tesla, an automated driving Tesla, was involved in an accident. No one was hurt, but there was a couple $100,000 worth of damage. And Tesla did not allow the insurance claims adjuster to be able to get the data from the car because they felt that was proprietary secret. So now, guess who's lobbying for Congress to say, please let us see all of your data? So the insurance industry wants all of this data. They're going to get this data. It's just a matter of time. And they're going to be building the platform. So how is trucking as this gig economy really going to work? How is it going to look? The first thing that you have to do is in any gig economy is you digitize the asset. What we see is that right now in trucking, in these small brokers, there's tons of load brokering sites. There's multiple loads everywhere, and that needs to be solved. We call it load singularity. Because of our insurance background and because of our insurance relationships, we're currently working with artificial intelligence, IoT, machine learning, big data sources, already feeding a lot of this in for the predictive risk that we're trying to assess for a load. And what is that going to be? How's the driver's safety? Where the route that he's taking? All of that stuff is already being calculated. So if we're going to provide this, we've already got it. Next, we want to automate the paperwork, make it easy. Trucking is traditionally, the operator is traditionally low tech. We deal with a lot of them. They don't pay their bills by their phone. They don't do these. They don't do that. So how are we going to get in there? Well, we've got to take away their paperwork for them automatically. So insurance, regulatory, all this baked in. We're also going to be supporting the future. Any good gig economy, you're going to make sure that you don't get automated out of the situation, right? So we need to have support for level 3 autonomous. That's the next. We got electric vehicles that are coming out. We're seeing this happen. We're even getting flying trucks, as some people call them drones, but I like to call them flying trucks. They're going to be picking up automated deliveries from whenever you put your request on the blockchain. It will notice that. There'll be a decentralized app that'll pick that up and send a drone to pick it up for you. All of that. And we heard about before interledger transactions. That's obviously something that's on the forefront of everyone in this industry. So I like to use the old happy wife, happy life. That was some of the best advice I ever received. And I think that it applies to the supply chain and the economy. I think if we have a happy supply chain, we have a happy economy. And being able to create transparency inside of that is what's going to enable it, and insurance does that. And so our solution that we're doing, and we've created from our policy blockchain, and this is the example of how InsurTech is just a real quick thing for somebody in our space to be able to create another solution. So we're taking all of the data we're storing, we created a separate chain, we call it Truck Chain, and we're launching it in 2018, handling only US-based loads. We've got 300 insurance agents. They represent over 15,000 independent truckers, and we're going to be using our Ethereum token to handle the payments. Right now, we're currently looking for participants. If you go to our site and you see one of our big mantras is innovation through collaboration, and that's what excites me about the blockchain community, is it truly is a collaboration. And we're looking for shippers, we're looking for load brokers, truckers, technologist, OEM manufacturer, whatever it is, if you're a part of it, we want to bring your data in, and we want to be able to provide value for your part in the chain. So if you don't want to participate in this, I ask that all of us here, we're here to learn about blockchain, I ask that we all participate in the disruption. One of the main things that I like to say is that blockchain is not just a technology, it's a philosophy. It changes the way we fundamentally look at our products and our business practices. If we apply the current model to the blockchain model, it doesn't work. We have to rethink all of that. And so you are going to disrupt through your actions, your decisions, your imagination, what you're willing to take at your business, how much pull you're going to allow your tech department to have, because that's an insurance. One of the things is we've got underwriters that want to make a decision, and the accounting is saying, so a tech department's going to issue this money? How is that going to work? That's very hard for a lot of them to understand and conceive. So this is, I'm sure we've all seen this, the great one quote here. It's been used, I've seen about 100 million times in presentations, and I found that I didn't have any of these references in mind, so I wanted to make sure I was on that bandwagon. But I want to add one little blockchain piece to it, is if you don't accept blockchain, you're pucked. So thank you very much. We're going to do a little switch here to kind of speed up. Since insurance is so glamorous and exciting, we're both going to take questions, so I'm going to let the following presenter come on up here, and we'll do questions for the end together. Thank you.
Okay. Guys, if it feels like there's not a single conversation you can have these days without using the word blockchain, right? You're not alone. And it's not just the Pulp Fiction guys that feel that way. If we look at the Gartner hype cycle curve, and for those of you who may not be familiar, Gartner is an industry advisory firm that tracks the life cycle of innovative technologies. Gartner has blockchain at the peak of inflated expectations, which means that these are the days when people expect blockchain to do everything. I mean, solve world hunger, put an end to wars, and as this curve progresses, you kind of realize that, you know, as technology innovates along this curve, you realize that no, it doesn't solve world hunger, and in fact only does 3 things really well. So you kind of get into the trough of disillusionment, and then eventually as the technology permeates into the work environment, you kind of really find out that it has significant value, and it permanently improves who we are and how we work, and how productive we are in our work environment. So the reason why we're all talking about blockchain, of course, is, right, I mean, it has a very promising future. It's still in its very early stages. And given the promise that it holds, right, there's a fear of missing out, right? If the promises come to fruition, there is no doubt that there will be a new slew of winners and losers in this. And so everyone wants in on the game to figure out how is blockchain going to disrupt my world around it. And that's really the reason why we're all kind of focused on blockchain, not just in the supply chain work environment, but globally. Right? And the mildly amusing thing about this that kind of occurred to me just this morning is that it's only a few years ago, or what, 2008, when the first protocols in Bitcoin were published, as kind of push back on the tyranny of the Federal Reserve System, right? Look how quickly we have adopted their revolution to kind of drive business process improvement. But anyway, so the key essence of blockchain, which everyone is closely familiar with, but I will, you know, not belabor on, is it's expected to bridge a gap in trust, right? It promises transparency, and it promises efficiency of operations. So hold on to those thoughts as we then kind of pivot into, let's talk about supply chain here, right? So talking about supply chain, how many of you in the audience know that earlier this year, just about every KFC restaurant in the UK ran out of chicken? Just completely ran out of chicken. They had to shut the restaurants down. I mean, how does that happen? Now, of course, they got through it by publishing a very amusing full-page ad in all of the British newspapers, which you kind of see there in red. Very interesting play on their own acronym. And guys, to be completely fair, that was just exactly what was published by KFC itself, right? But what that reinforced, of course, is a business is only as strong as the supply chain upon which it depends, right? And so every business has to focus on what are the contributing factors that allow them to stay operational that are dependent on their supply chain. And this is not the first time something like this has happened. I mean, when the Boeing Dreamliner was being built, they ran out of fasteners and apparently had to go to Home Depot to buy fasteners. I mean, you and I perhaps fly in planes that have been fastened through stuff that we might use in our backyards. The insurance company Zurich Insurance did an exhaustive study of companies' business continuity plans, kind of looking at it from an insurance point of view. And of course, I won't read you all those stats there, but the key essence of what they discovered is that 75% of the companies they surveyed did not have complete transparency into their supply chain. And a significant number of these companies, 9%, had experienced at least one significant event exceeding $1 million loss. And so these are real numbers. PricewaterhouseCoopers, right? The PwC company showed that for publicly traded firms that experience a supply chain disruption, it could result in as much of a 10% drop in their market value. Guys, you're talking about millions, hundreds of millions of dollars here, right? Now, in the KFC case, they actually did not experience significant client runoff just because of how amusingly they addressed it. But that's quite an outlier. The Boeing company, as a case in point, had to pay hundreds of millions of dollars of penalties in delayed airplane shipments just because they did not have a good grip. As mature as Boeing is, they did not have a really good grip on their supply chain. So supply chain disruptions run the entire spectrum, and this list is by no measure an exhaustive list, right? These days, IT challenges plague supply chain in a significant way. Cyber risk is becoming an increasingly dominant player. Adverse weather events and supplier outsourcing risk. I mean, these are some key events. Every day you read in the newspaper that a company has had a disruption because one of their key suppliers went under, or one of the key suppliers had a balance of payment issue, or something or the other happened to them, right? So supply chain disruptions risk the business continuity of the companies that depend on those supply chains. And so insurance companies have obviously, just like every measure, have started seeking to provide some measure of risk mitigation towards specific supply chain disruptions. Now, insurance, by its very definition, is a business of spreading risk and mitigating that risk. And these kinds of insurance products now exist in the market. Of course, physical loss and damage is like the standard, the property casualty. It's the oldest form of insurance. But now there's, non-physical damage insurance. What if a ship is stuck in the Suez Canal ahead of yours? There's increasingly more so reputational risk damage that companies risk essentially by having unclear visibility into their supply chain. And it's as simple as, I'm sure that several of you are aware that only up until a few weeks ago there was a massive recall on romaine lettuce that was farmed in Yuma, Arizona. Now, if I'm buying salmonella-tainted lettuce out of Kroger, I don't care who grew it. I'm not going back to Kroger. And so that's the reputational risk that a company such as that has to deal with in the supply chain. The interesting thing, though, is that adoption of insurance in the supply chain is really low. And so this study, again, by the Zurich Insurance Company, showed that 43% of the companies that they surveyed had no supply chain insurance whatsoever. And if you look at the full donut there, 80% of the companies had less than 50% of their risk insured. This is their supply chain risk insured. The question then that begs itself is, why is there so much underinsurance? And I think we perhaps all know the answer. Firstly, supply chain insurance for companies that don't even know their supply chain very well, it's very, very hard to figure out what is it that they're insuring for. Secondly, premiums I mean, you can spend a lot of money in insurance premiums and not know what you're buying in return. And finally, even if a insured loss was to happen, the process of collecting the claim on that is such a big turnoff for most companies that they eventually just walk away from trying to insure it in the first place. So the point I'd like to share with you is, let's get down to blockchain finally. Blockchain is making a very significant impact in the world of insurance. In fact, blockchain, as it kind of, the first use cases of blockchain, as people started conceptualizing what blockchain could do for you, it was in the financial sector, and then it has quickly narrowed down to being in the insurance sector. And so now, there's a whole lot of things that blockchain is impacting in insurance. Something as simple as, flight insurance policy. Apparently, Lufthansa is offering this, that if you're insured, and if a flight is delayed, they pay you out instantly. Instantly. You don't have to file a claim. It's all based on a blockchain-driven smart contract that has a trusted oracle that knows what flight you're on. And if that flight is proven to be delayed by whatever system Lufthansa tracks, then it's paid out to you. Right? So imagine the use of something like that in a supply chain environment and what that could do for companies that utilize the supply chain. So I'd like to spend a couple of seconds on this slide and the next one, and then kind of take it from there. So blockchain-driven insurance mitigation has a very significant potential. And as you see on the list there, perhaps if you call out just a few, IT or telecommunications related outages. So the speaker prior to Derek, the lady from Filament, she was talking about trusting machines. There are potential for us to have uptime trackers. I mean, IoT devices built into machines that track the performance of machines and the products that they build. And if you have a significant disruption in a certain product that's being built that has the potential for a downstream supply chain event that might occur to you, there's a possibility that a blockchain triggered smart contract could pay you out on an insurance that you have towards quality products or a machine throughput coming to you from that machine. Or a set of machines for that matter. A case in point, again, utilizing the semiconductor industry as a case in point, I used to work for Texas Instruments, and if you ever owned a Nokia phone, it perhaps had my fingerprints on it. But you have a machine go down, you have a batch fail, your deliveries of microchip to Nokia, that time, Nokia no longer exists, but in that time your shipment to your phone company is delayed, and you no longer get your phones on time. The moment that a machine goes down, and semiconductors work on, at least the traditional semiconductor fabrication is on a batch process, you have a batch fail, there could be an insured event right there that pays out without having to go through the due process of filing for a claim. The point I'm trying to make, guys, is that all the underinsurance that exists in insurance, that exists in supply chain today, the world of blockchain could open up so many more insured events at significantly lower cost that it genuinely has the potential to reduce the business disruption that companies today experience without having any insurance towards it. Now, again, we are in a very early stages of conceptualizing, right? As we know from the Gartner hype cycle curve. There's a lot of events that could be insured. Use cases for other events still need to be crystallized. It's not a one-size-fits-all. It's not a silver bullet for everything, but there's certainly a lot of use cases. And the final kind of slide I'd leave you with is, I was asked about what is it that my company is doing about blockchain itself. Now, I work for a company that does predominantly office products. Our legacy was in paper and print. And if you think about it, insurance and supply chain are two industries that use significant amounts of paper. Right? There's all this chain of custody, there's audit, and the practicality of the day-to-day work is, what version of contract do you have? I have version 3, you have version 2. Well, we both have version 3. Well, what's a date of yours? Let me print another copy out. It's a very, very manual work environment, and as the world digitizes, my company is helping our clients migrate away from this, this paper-heavy work environment into a blockchain-driven workflow that is trusted by all the parties on the blockchain, so that when you have a document that's embedded in the blockchain, you're assured that everyone has the same version of the document that has previously been agreed upon. No handwritten notations on the side that you would take to a litigator at some point in the future. We are helping simplify how work gets done in insurance and in supply chain. And so in summary, this is kind of already shared, blockchain has the potential to simplify consumption of insurance in supply chain and thereby increase business continuity for the clients that consume your supply chains. I'll leave you with that. My colleague Derek and I will take questions in Q&A in the same session, if you will, please. Any questions?
You currently have two questions from Twitter. You currently have two Twitter questions. One is asking about how smart contract insurance can guarantee the truth of the data.
So the previous speaker had, the garbage in and trusted garbage out comment. I think it was very, very cleverly said. There needs to be a trusted source of information that everyone agrees is a trusted source. Right? So in the case of adverse weather events, these are perhaps NOAA-driven oracles. So you have something that you decide is a trusted source. That trusted source, in the case of, let's say, financial markets, it could be the LIBOR rates. I mean, they're trusted. It's what's used. So when you have something like that, which you call an oracle, and you build that oracle into a smart contract, that's your trusted source. Derek, perhaps you have an
Sure, yeah. One of the main philosophies of our organization is that data should be owned by the people. And so we create a smart contract that says your data is your data. And if you want to go buy insurance or you want to go out and share that information, then we create a smart contract that links that data, those exact data points, to that other entity on our network. And at any point, that can be revoked. So that's another way that we use smart contracts to handle data.
Yeah, but the bottom line remains, folks, that there needs to be a trusted source of information that's indisputable in its trust. And that is what forms the core essence of a smart contract.
The next question is, how about natural disaster-induced supply chain disruption? How can blockchain-based solutions solve this problem?
I don't know if blockchain could mitigate natural disasters. I mean, I
was letting you take that one.
I did say it could solve world hunger, but natural disasters, I don't know about that.
I think maybe more in terms of doing some predictive analysis as to how a storm might impact the supply chain.
Yeah.
Yeah.
Cat prediction and stuff like that.
Efficiencies to mitigate that.
Yeah. So putting the joke aside for a moment, there's a couple of ways to think about this. So first and foremost is that if you have a trusted source of information on a weather event or an adverse event that has a potential to disrupt your supply chain, right? That triggers a smart contract to pay off an insurance claim. So for example, if the wind speed, we live in Texas, most of us. I live in the Dallas area. You have a tornado watch once in a while. If wind speed exceeds 40 miles an hour, right, it's expected that there's going to be a certain measure of damage to most residential homes. I mean, these actuarial tables have been built for the last 40, 50, 80 years by these insurance companies. So if there's wind speed in excess of 40 miles an hour, you get paid out on an insurance contract with your insurance company. That's one way to think about it. The second way is that insurance companies are dealing with, insurance companies, of course, have to have a very large capital reserve to pay out for insured events, given that they're fundamentally mechanism for distributing risk. But risk is now being distributed not just to these vast reserves, but they're also being distributed out to the capital markets. So something like a catastrophe bond or a catastrophe swap, right? In the event of a very large adverse event like Hurricane Harvey, where insurance companies don't necessarily have the ability to pick up $1 trillion loss and it's spread out into the capital market, is a way to mitigate the risk, not necessarily prevent a adverse weather risk from happening.
And I just to touch on that, insurance companies are doing cat modeling. They have machine learning that's predicting, they're the ones that are taking the loss, right? So they're the ones that are actually paying the money at the end of the day. So they're going to try to figure out all the ways that they can mitigate that. And in combining weather data with behavioral data and all of these is what they're utilizing: machine learning, artificial intelligence. I've got a bunch of clients that are doing that right now. And then there's the other side that technologists are saying to executives, you can automate your claims process and make it easier. And I think that's something they're still wrestling with. The idea to go execute some $1 billion payment on a smart contract just because the weather company said it worked, that's still nobody's really wanting to do that yet. But that's the potential that we're talking about.
Indeed.
Okay, we have no further questions on Twitter. What questions do we have in the room?
Thank you. You guys are talking about the Oracle as being the arbiter of trust. So I'm wondering, are there any applications that you're seeing in the insurance space where you're actually bringing in miners, excuse me, to validate the data that's executing the smart contract?
I know of 2 proof of concepts that are creating that. We had a proof of concept where we were going to create what we called an agency miner, and essentially that miner would be installed at an agency office or a broker's office, carrier, and be able to validate the transactions. I think it's losing steam in that way. I think what's probably more the future and what everybody's buying into is enriching the data that they currently have. So what can they do by putting data on the blockchain and then being able to enrich that data from other sources and bringing that. So it's not so much is defining the Oracle as it is enriching and creating what they feel the best view of that data is. That's kind of the next step.
I'll leave it with that.
Okay.
I think that pretty much covered my thoughts too.
Cool. Okay, great. What other questions do we have? Do we have any questions on this side of the room at all? Okay. What about over here? Okay, great. Well, with that, thank you, gentlemen, for sharing
Thank you very
your
much.
expertise.
Sure.